AGOA Conference on the Africa Growth and Opportunity Act gets underway tomorrow. Africa 54's Esther Githui-Ewart joins us now to tell us more. Esther.
Thanks, Vincent. The U.S. Africa Growth and Opportunity Act, or AGOA, was renewed for another 10 years in May, and now it's the focus of a conference opening on Wednesday in oil-rich Gabon, which depends on crude exports for nearly 80% of its export earnings. However, few African economies take advantage of AGOA, which provides the world's largest market because they have little to export beyond commodities, an asset class where prices are in free fall. For the people of Libreville, Gabon's capital, where the conference takes place tomorrow, the forum gathering African trade ministers intended to empower the African continent seems a million miles away from their reality. Placide Adande is a resident of Libreville.
Personally, this is the first time I'm hearing about AGOA. And from what I've learned, AGOA will help young Gabonese entrepreneurs to internationalize their businesses. So for me, it's a good thing.
Statistics show that African exports to the United States under AGOA were $26.8 billion in 2013, but more than 4/5 were oil sales. However, countries such as Kenya and Ethiopia that are best placed to grow manufacturing sectors to extract benefit from AGOA are not dependent on oil or mining, giving them an incentive to diversify. U.S. officials privately say many African states lack the industries to take full advantage of AGOA. But U.S. Assistant Secretary of State for African Affairs Linda Thomas-Greenfield, who is attending the forum, says the U.S. wants to look beyond the 10-year extension when they hope to have a more mature trading relationship with African economies.
I think African countries have not taken full advantage of the opportunities that AGOA provide. And we are working with those countries through our trade hubs and through consultations with American companies and trade ministers to try to increase the productivity of companies that are exporting to the United States, to increase the quality of the products that they are increasing, working with them to show them how to provide quality products for the United States market. And it's a long-term process. It's not something that's going to happen overnight, but I think the companies get it, and certainly the AGOA-eligible countries get it.
The World Bank says sub-Saharan Africa's exports soared from $104 billion in 2000 to a peak of $457 billion in 2011 because of the commodity boom. Over the same period, the value of manufactured goods from the region rose to just $58 million from almost $19 million. In South Africa, the region's most industrialized economy also remains far too dependent on commodities, which accounted for about 57% of its exports last year. While in Tanzania, the value of manufactured exports overtook gold for the first time in 2014, increasing by 34% to reach $1.4 billion. Back in Libreville, Ahmed Mikalal has high expectations on AGOA.
With AGOA, we could not have expected anything better regarding import and export of goods because it has always been difficult, adding to the fact that banks around here do not give us loans or help us in any way. They don't take chances on us, so if AGOA can help us with a solution to this problem, it will be something great.
Countries like Ethiopia, on the other hand, is positioning itself to become a manufacturing hub with a focus on pharmaceuticals and driven in part by investments from China and India. Kenya also plans to promote special economic zones as a path to industrialization, and analysts say its strategy may produce tangible results. Exhibitors at tomorrow's forum are keen for the AGOA incentives and tariff-light regime to continue to open the door onto the huge U.S. market, and it's showing some signs of success in those countries less dependent on commodities with wildly fluctuating prices. As the U.S. Assistant Secretary of State for African Affairs, Linda Thomas-Greenfield, stated, AGOA-eligible countries need to take full advantage of the opportunities provided by the trade deal.